On February 1st, the budget was presented. And of course, on February 7th at 10 a.m., the repo rates, the reverse repo rates, and all the rates were revised in the economy, right? So this video is going to be delving into the tax part, that is the income tax part of the budget, and of course the rates that which is decided by the Monetary Policy Committee, and of course we'll also be seeing the impact of the uh, impact of the revised tax slabs on the consumption, and also so hello everybody, this is Samvid Narayan and welcome to Samvid Money Minutes. To the Monetary Policy Committee meeting that was held on 7th February, right? So the repo rate is actually cut down by 25 basis points to 6.25 percentage to boost economic growth. The standing deposit facility is set at 6 percentage, while the margin standing facility is remaining at 6.5 percentage. So this time the monetary policy stance is actually neutral, which is allowing flexibility in future decision. But I'll also talk about news that has come very recently, not recently, but today evening, which actually shows, which actually speaks about increasing again the rates by 50 basis points. Okay. And also adopting accommodative structure that will come sooner or later in this particular video. So now the outlook to the GDP growth, there is nothing but the GDP growth so far projected for 2025-26 is at 6.7 percentage, which is completely driven by investment and consumption, right? So the GDP growth is for 2025, the remaining part of 2025 is estimated as 6.4%, with quarterly estimates as at 6.7 percentage, Q1, Q2 7.0 percentage, and Q3 and Q4 is at 6.5 percentage each, right? Now, inflation trend. Inflation is actually eased from 6.2 percentage from October 2024 due to falling in food prices, right? And the consumer price index forecast for 2025, 24-25 is at 4.4 percentage, with a fourth quarter of 4.4 percentage, and 2025-26, the next year, is at 4.2 percentage. But this is only when there are no major economic shocks, right? So the global concerns are, first is geopolitical tensions like wars, conflicts, and especially the Russia-Ukraine war, Israel-Gaza war, etc. And second main concern is trade policy and supply chain disruptions. And third concern is the highly volatile financial market, which affects the capital flow. Right now, what does this monetary policy committee, the rate cut actually means for India? First, the lower interest rate, which actually boosts home, automobile, and business loans. Second, inflation control, which helps in maintaining the purchasing power. Third, economic growth and support, which encourages the private consumption and investment. The fourth is flexibility in policy, which remains cautious, in between all these global uncertainties. Right now, how is this rate cut actually going to impact the stock market first. The stock market is actually bullish about the, or which actually shows the positive sentiments, because the lower rates actually typically boost the stock prices as companies can expand at lower borrowing cost, right? So the borrowing cost is going to be getting lower, which actually prevents the entire economy from something called stagflation, which is nothing but uh, a condition combining inflation and stagnation. And second is bank, real estate, and automobile stocks actually gain, right? And third, very very important thing is the rupee volatility. A weaker rupee might affect foreign investment and IT stocks. The previous cut in rates was actually at March 2020, which was cut by a significant 75 basis points to 4.4 percentage. The repo rate was cut. And one more thing, I also told you about the accommodative stance that the RBI is planning to take, right? Experts are actually predicting that in the next monetary policy committee meeting that might happen in April, right? The rates might actually uh, cut down more by approximately maybe 50 basis points in order to take an accommodative stance, which actually aims to stimulate the growth by increasing money supply, right? So the RBI is more towards the stimulation of growth. Okay, but on the other hand, I also told you about the stance of or the analysis of the budget, which was presented by Mr. Krishnamurthy Subramanian, right? And I also explained you the rates in the income taxes, right? So that's all for today's video. If you like this video, please do give it a big thumbs up, and also mainly subscribe to Samvid Money Minds, right? So for more information and more economic content, meet you in another video. This is Samvid signing off from Samvid Money Minds. Goodbye. So that's all for today's video. If you like this video, please do give it a big thumbs up, and also mainly subscribe to Samvid Money Minds, right? So for more information and more economic content, meet you in another video. This is Samvid signing off from Samvid Money Minds. Goodbye.